Look, the only thing that matters is the halving right now. The ETF, water under the bridge behind us. It kind of does feel like Groundhog Day. Since December, since first week of December, it's been 43K like the whole time. We had one spike up and one spike down, but other than that, just kind of every day it's the same. And I think that's all about to change pretty dramatically as the halving comes.
Despite recent challenges surrounding ETFs and the short-term decline in Bitcoin's price, Mark Yusko, American investor and CEO of Morgan Creek Capital Management, maintains a bullish stance on the crypto asset's future. Yusko emphasizes that currently, the ETF complex is buying approximately 3 times the number of Bitcoins mined each day, creating a supply-demand imbalance that could drive prices higher. With the upcoming Bitcoin halving event, Yusko is certain that the potential for the daily production of Bitcoin will increase 6-fold shortly, leading to a further supply-demand disparity that could push prices to absurdly high levels. The halving event, programmed into the Bitcoin system, will cut down the rewards miners get for finding new blocks by 50%. This means that the amount of new Bitcoins created is reduced by half, slowing down how many new Bitcoins are added. Since only 21 million BTC will ever be available, the halving helps make Bitcoin more valuable by making it rarer over time. The upcoming halving will lower the block reward from 6.25 BTC per block to 3.125 BTC. Yusko also discusses the possibility of a substantial amount of money entering the market. He points out that, at present, only around 1/3 of this estimated sum has entered. As the market adapts and more investors become interested in cryptocurrencies, Yusko anticipates a larger share of the estimated funds entering the market. Let's now take a look at some clips of Mark Yusko as he discusses the future of Bitcoin in his interview with Mike Ippolito of Blockworks Macro. As we share the clips, we encourage you to click the like button, subscribe to our channel, and turn on notifications for future videos. Feel free to share your thoughts in the comments. Your support helps more people see our videos on YouTube, and it helps our channel grow. Thanks for your help, and we hope you enjoy the video.
The captive investor base in these brokerage firms that haven't been allowed to participate, is roughly 30 trillion, pick a number. And 0.1% would be 30 billion. And that would move the market. And we've seen about 1/3 of that. We've seen a little over 10 kind of come this way. But it doesn't happen in day one. And it gets, I would argue that 0.1 is even kind of a silly number. I think it's easily going to be 1%. So that's 300 billion. But what we saw was a bunch of the big guys said, oh, no. Even though this is a BlackRock or Fidelity approved ETF, we're still not going to let you buy it with your money. So people said, well, I'm out, right? I'll just leave and go someplace else. But eventually, I think they're going to change their minds, and that money will continue in right now, every day, and we'll see how long it lasts, but I think it's going to last for a while. Every day, the ETF complex is buying roughly 3 times the number of Bitcoin that are mined. So we got the halving socks on today, and that's only for the next 3 months. 3 months from now, that number goes from 900 to 450. If the same pace keeps up, which I think is pretty likely, you're going to be talking 6 times the daily production. And so that is a supply-demand imbalance that will lead to rising prices. And I mean, people have heard this from me ad nauseum. Rising prices beget rising prices, right? Once an asset starts to move, people are drawn to it. That's the way it works. And that will push us past fair value into, silly levels sometime in the crypto fall that'll start, next June. And a year from now, I think we'll be talking about, oh my gosh, how did we get to triple digit Bitcoin? And when's the bear market coming? Because there will be another bear market, because the FOMO gets really extreme as you start to go parabolic in any asset, like NVIDIA right now. I mean, Tesla before. I mean, NVIDIA right now it's amazing to watch. But volatility Bitcoin was triple digits. when it started because it was a science project. There was no there. It was super volatile, a little penny to 2 pennies. That's a 100% move. But as it has gotten more mature and gotten bigger, that volatility is now trended down. It's like in the 40s, long-term still closer to 65, 70, but we're definitely going to trend down. And it's because the passive holders, hodlers are part of that, but now the ETF is structurally a passive holder. Leverage is also down, so there's not as much leverage and as much speculation. The passive versus active debate is a tough one because the more passive there is, the more you just keep reducing the supply, and that's like a supply shock. I just saw this stat that kind of blew me away. I mean, I knew the lost or stolen component of Bitcoin was big, but I never saw it in a visual. The estimate is that 5 million of the 19 million coins that have been mined to date are untouchable. Lost, stolen, stuck in multi-sigs where somebody's passed, or that's a big number. And even if it's not right, it's probably not off orders of magnitude. And so that 3% is probably more like 5% and trending to a very large number. So supply shocks will lead to higher prices.
In the same discussion, Yusko provides a critical analysis of various economic aspects, with the Federal Reserve being one of his main focuses. He explores how the Federal Reserve has historically responded to economic challenges, noting that they usually lower interest rates during recessions. The Federal Reserve's decisions on interest rates can impact the cryptocurrency market in various ways. Changes in rates influence the attractiveness of holding traditional currencies compared to cryptocurrencies, affecting market dynamics. Cryptocurrencies, especially Bitcoin, are often seen as a hedge against inflation, so actions indicating concerns about rising inflation may drive interest in digital assets. Furthermore, shifts in overall market sentiment and risk appetite, influenced by the Fed's decisions, can impact demand for cryptocurrencies. Here are more clips of Mark Yusko as he shares his insights.
I mean, look, the idea that they were going to cut rates now was always silly. And I guess the market, right? And what is the market? It's the collection of the participants. I think actually believe they could bully the Fed into it, which, because it's always that, well, this predictor is always right, so it has to be right. Well, no, it's not causative, it's correlative. So I think that was the first thing. So the idea that suddenly we were going to be in a world where rate cuts were not only necessary but were politically palatable, I think was silly. Now, we are in an election year, and as we get closer to the election, I think the odds go up dramatically that there'll be pressure from the incumbents to cut rates. So that I think is real. But again, if you look at history, when do Feds cut rates? They cut rates in response to economic weakness and recession. Like we're literally in recession. It hasn't been called yet, but if you look at the chart, you got the gray bars, and those are the recessions, and the rate cuts start inside those gray bars. But those gray bars haven't been called at the time of the rate cuts. That's kind of like the acknowledgement by the Fed that, things are getting bad. And then 9 months later, the powers that be, the NBER, say, yep, you were right, there's a recession. So not anywhere close if you look at the data, particularly, GDP data surging. Now, that's a false flag in that, Q4 GDP. It's like, yeah, look how great we are. That is the best $300 billion of GDP that $800 billion of fiscal deficit could buy. Yeah. I mean, if I pay $800 billion for something, I better get more than $800 billion. Don't give me $300 billion. Where the hell did the other $500 billion go? Interest and other places. So there is a there's a bad multiplier effect in government spending right now. It's worse than the normal government spending. Government spending has a negative multiplier. What you want for economic growth is corporate borrowing and spending, not government. Government crowds out private. So that's bad. So that's the first thing. It's just a myth that, we just pumped up the economy with fake money. And anyway, so we got that. Then second thing is jobs. And, you and I've talked about this ad nauseum, so I'm not going to belabor it, but, they're going to keep faking the jobs numbers. And I sent you the analysis the other day that, it's like 50% of the reported jobs then get taken off later in adjustments, but no one looks at the adjustments. So whatever. So they're going to keep lying about jobs. And so no chance that you could just say, we're going to cut. Now, does that really matter? Well, the market response was pretty quick. To me, the more important thing from the FOMC was the removal of the lines about how stable the banking system is.
Meanwhile, in recent updates on Grayscale's Bitcoin ETF, the transition of the GBTC product to a Bitcoin ETF faced initial challenges due to its high fees compared to competitors, resulting in significant daily outflows of $450 to $600 million. However, in the past week, these outflows have slowed to $220 million, while net inflows have risen to $200 million and $247 million on consecutive days. Things are certainly shifting, signaling a potential stabilization. Data from Bloomberg Intelligence on the 16th day of spot Bitcoin ETF trading indicates that Grayscale's GBTC is at the forefront of the market, boasting a trading volume of $338 million. Following closely in second place is BlackRock's IBIT with $233.4 million, and Fidelity's FBTC takes the third spot with $176.4 million. Given that most spot Bitcoin ETFs are experiencing more inflows than outflows, the overall evaluation suggests that the market is gaining good traction. Considering what Mark Yusko shared about Bitcoin's future and the insights on how the Federal Reserve affects the market, we're curious about what you think. How do you think the upcoming Bitcoin halving will change the crypto scene? And what could it mean for the market? Your thoughts matter, so please share them in the comments below. If you liked this video and found the discussions interesting, please give it a thumbs up, subscribe to our channel, and hit the notification bell for more engaging content. Your involvement helps our community grow, ensuring we bring you more exciting insights. Stay tuned for more analyses, interviews, and updates. Thanks for being a vital part of our community, and we're eager to hear your thoughts on the evolving cryptocurrency landscape.